Don't throw your money down the drain. You should buy your first home. No, you should invest in the share market because it generates more return. Oh no, but Steve Buffett just told me I should be buying my first home. Oh no, but Nisha said you should be investing in the share market.
Oh my god, what should I do?
Take a deep breath. Chill. It's bloody stressful, isn't it? The problem is, you are different from the person right next to you. So whether to buy a home for yourself or to invest in the share market or cryptocurrency or art or gold bar depends on 4 different factors, which I will distill in my video. If you have been following me for quite some time, you probably noticed that I'm never a black and white person. And this is my pet hate for YouTube or Instagram when complex information are supposed to be distilled into either a black or white and people make very simplistic decisions from there. Life is not that simple. You are different from the next person beside you. And this is the reason why you have to consider major life decisions like whether is it better for you to buy your home through a whole matrix of factors such as how long are you going to stay in that city for? How long are you planning to stay in the property for? Are you planning to form a family? Do you want pets? Do you want to be a digital nomad at some point in your life? How secure is your job? Do you like a certain suburb? It's complex. Well, some of these different factors are noise. Some of these different factors are personal preference. So you have to really understand where you stand when it comes to these factors. And I'll tell you, what are the factors that you need to consider when deciding whether is it better for you to buy your own home or invest? Factor number 1, have you been investing in the share market? If the answer is no, my next question is, do you plan to start learning how to invest in the share market? And I would strongly advocate you to learn how to invest in the share market, even if you were just to buy a very straight vanilla ETF. ETF stands for exchange traded funds. Think of them like fruit baskets. You can buy an American fruit basket. You can buy a British fruit basket. You can buy a European fruit basket. You can buy a Chinese fruit basket. You can buy an Asian fruit basket. You can buy a mining company fruit basket. Well, there are many. You could even buy uranium fruit baskets if that sounds appealing to you. I invest in uranium shares. So because traditionally investing in the share market has been a really good performer, and you don't even need to analyze, is Ocado a better company to buy than, let's say, M&S or Sainsbury? If you are not interested in going to that level of details, you don't have to. You just need to buy a fruit basket of supermarkets and that's it. If you have not been investing, then yes, it's actually okay to buy your own home, especially in the UK, because your money is sort of sitting around not doing anything. So if you haven't been making your money working, then in that sense, renting is really equating to just throwing money down the drain, because your money is there sitting around earning a paltry 4% interest. If you can get 4%, it's not serving you, right? So the first factor is, have you been investing and are you planning to? If not, I would highly recommend you to do that. I know investing in the share market is not for everyone. There are people, because of being time poor, maybe because they work in the financial industry and there are a lot of rules and regulations and the compliance department will be breathing down your neck if you start investing in the share market. Maybe you're a reporter and you write about the financial market and you can't invest in the share market. And in that case, yes, you have to put your money to work somewhere. It might not be the share market, but you could invest in the cryptocurrency or just buy gold bars, right? This is not, financial recommendation, not financial advice, but I'm saying putting your money to work is the first premise. If you're not doing that, then it makes sense to buy your own home and just build equity from that. But I always say, do not view your home as an investment, because your home is not. I cringe when people sort of go, oh, I'm going to buy this, I'm going to do it up, and then I'm going to flip it in 2 to 3 years' time. That model worked in the UK maybe up until 3 years ago. because when the property prices keeps going up, this is actually quite a lucrative way to make money. It's not easy because you probably have to project manage, be on a construction site all the time, and maybe even live on a construction site for a short duration of time while you get the house fixed up. But there's a high chances of success if you do that, even up until 3-4 years ago. But I think now the opportunity is gone in the UK anyway. If you're listening, if you're watching this from other parts of the world, I wouldn't be surprised if there are opportunities in places like, I don't know, Greece, Albania, or maybe rural France. Who knows? I'm not familiar with those markets. Actually, if you have experience in those markets, please leave a comment below. I would love to hear what are the hot markets where you could buy a place and fix it up and make money from there. So that's the first factor. Whether is it better for you to buy your own home or just invest or continue renting. Investment, I would say that's actually the big one. How hard can you make your money work? The second factor, and this is, I guess, kind of more specific to the UK, because being an accidental landlord is really not fun. Accidental landlords are people who bought their first property or bought a property initially with the intention of staying there, but life circumstances change and they ended up not using the property and have to rent it out to cover the mortgage, or even just make some money back if you bought the property if you bought the property with cash. If you don't plan to stay in the property for a minimum of 5 years, do not bother to buy it. In the past, I have seen friends who make money by buying a property that just needs a bit of cosmetic changes, do the cosmetic changes required, sell it 2 years later, make money, and then they move on to a much bigger property or a property that is more centralized. Because with that 2 years, they might have also saved up more money so they can afford a higher deposit and so on. That model really doesn't work in the UK anymore. So like really don't even bother. So in the UK, if you are an accidental landlord, your rental income will be taxed at your maximum tax rate. It's considered your earned income. And there are going to be some changes going forward where you might have to pay national insurance on the rental income that you collect. And also the fact that the renter rights bill is coming into place in May 2026. It also means as a landlord, it's very difficult for you to get a healthy yield out of your property. So if you don't plan to stay in the property for more than 5 years, if you live in the UK, just don't bother. You are much better off renting, even if you have to pay a higher rent for just to find a place to live. You are still much better off renting. And this is where I kind of hate it when influencers or interviewees who are more American based, I have no idea where this interviewee is from, where there's no such rule in America or places like Singapore where I'm from. Being an accidental landlord is actually a wonderful thing in Singapore, and I am an accidental landlord in Singapore. So just be really clear. Are you going to live there for hopefully 5 years and above? Because that question leads to a lot of other what I call sub-factors. How secure is your job? Are you going to live in London or Manchester or Bath or whichever part of the UK you're from? Are you planning to live there for at least 5 years? Because that's also dependent on where's a better place for you to work. Where are your job opportunities? With the UK economy not doing that well, maybe your next job opportunity is in Dubai instead of Manchester. Right? So that's one factor you have to consider. If you're in your 20s and early 30s, what about getting married? Are you planning to get married? I mean, sometimes you don't plan for such a thing, right? Like people just ended up falling in love and get married. Is the place you're planning to buy big enough for 2-person or maybe even a small family? If it's a 1-bedroom flat, that's not going to work, right? So what are you going to do about it? And that's really, I would say that's really the second big factor. How long do you plan to stay in the property? And I would say the next factor is, how much emergency funds do you have? A lot of people don't talk about it, just think about, I want to get on the property ladder. And they don't talk about the cash flow impact after they bought the property. Because when you buy a property, and I do not recommend people to do a 0% deposit, I would always recommend them to do a minimum 10% deposit and then borrow the rest of the money from the bank. But with that 10% deposit, do you have enough emergency funds left from the point you move into the property? Because a lot of your cash would have been depleted to pay as a deposit for the property. So that's probably the third factor. How much emergency funds do you have to support your lifestyle just in case the unfortunate thing happen? And I think the fourth one, really just a personal preference. Like some people hate renting, absolutely hate it with their guts. And I don't blame them. The rental market in London is really broken, and most of the properties up for rent are pretty appalling in their quality. So some people just want to have a slightly better quality of life, to own their property where they can decorate it however they want. Just be mindful of the price you're paying to buy a property. Maybe you're better off increasing your rental budget just so that you can live somewhere nicer and have a better quality of life, while balancing, are you making money from the share market and so on. So I don't have a black and white answer for you, and that's not what I'm about. And well, no disrespect to Steve Bartlett, but honestly, who has the time to listen to like 1.5 hours of whether is it better to buy or to rent? I mean, my longest video is 30 minutes, and I show you up to the dollar amount of how much you're better off if you just invest in the S&P 500 as opposed to buying a average price flat in London. Half an hour, that's it. If you can't explain that in half an hour, I think you're just wasting other people's time. But anyway, I hope you find this useful. I think this is probably a 15 minutes video. If you find this useful, do me 3 favors, okay? Like, subscribe, and leave a comment below, and you can just say yay to 2026. Or tell me where you think is a very good place to invest. And I look forward to, I actually really enjoy seeing discussions in the comment section. So see you again soon. Bye.